All right, YouTube. This is GMAC. This video is going to be how I trade, putting it together. We went over market structure, went over liquidity. We kind of went over how I trade. Um, but first thing I do is I go to Forex Factory, look through the week, see what news is going to be going on, see how that's going to affect my trading. Where I trade Asia, it really don't affect me as much because I'm not in the markets, New York or London, but I still do check it, keep up with it, and make notes how it affects the market. So I'm on a 5 minute chart right now. I'll look at the weekly, the daily, but where I trade Asia, I usually start on the hourly and see what we're doing. And I see the U.S. session, we're in an hourly fair value gap. It respected it, and we made a swing high. So I'm looking for some sort of retracement back into external liquidity or internal. What I mean by internal is like a fair value gap where external is highs and lows and internal is uh, fair value gap. So we'll go on a 4 hour. You can see we're in a bearish CIVI up here. It's still, it's been respected. It had a large drop off from up here. So I'm going into it looking bearish. I got on the charts about 7:30, 7:45, looking at the 8 o'clock candle. So I marked out the 7 o'clock was kind of a doji, but it did take out the low. So I was looking for the 8 o'clock candle to come up over the 7 o'clock candle, take it. And on a 15-minute chart, this is kind of what it looks like. This is my area of interest, was this fair value gap. Pretend like this is not here. This is the 8 o'clock candle. So I'm looking at it to see if we're going to respect this fair value gap. If so, I'm looking for it to blow out that low. And on a 5 minute, um, what it looks like is we're engineering sell side liquidity right here, like these equal lows right here. You see how we had one touch, two touch, the third touch, and then broke through. So this 8 o'clock candle, it took the 7 to 8 o'clock high, and it's in a 15-minute fair value gap. So on a 1 minute, I got on here. I did take a loss because I went long. I thought we might, at first go long. I was in, took a $300 loss, but then I waited and saw, got my bearings, went back in it, and got in, right in this consolidation with my stop above this wick right here. It was 573, and I was like in at 65. So it was like an 8 point stop. It was like $200, and I was targeting 600, which was about 30 handles. And you can see it delivered 564 all the way down to 22, which I was out up here. But anyway, that's just, I was trading the macro and it didn't deliver. And I was like, okay, it didn't respect it. It inverted this fair value gap while making one. I thought about getting in here, but then I was like, I just didn't want a revenge trade. And then I saw it make these equal lows, one, two, three lows here, and I was like, okay, we're going to blow out this low here. Um, so that was kind of my trade idea. Um, so we'll go back on a higher time frame on a 15-minute, just mapping out market structure. Higher highs, higher lows. Then we look at liquidity. But with me trading Asia, what I'm looking at is how are we reacting to bullish or bearish PD rays. And you can see we are respecting 15-minute fair value gaps all the way down. We're respecting them all the way down. Same thing here. And same thing right now. And the reason I thought we was going to do that is on a 5-minute chart, I saw all this down here. So that was my initial draw after I messed up. But I always start on the higher time frame, which is the weekly, the daily, see what kind of PD arrays we're in. If I was trading New York, I would definitely incorporate the 4 hour in the daily. But where I just trade Asia, my higher time frame is always the hour, and I kind of see where we're at, and then I'll go down to a 15-minute and see what we're doing on that. So I do, all I really use is market structure, liquidity, fair value gaps, and order blocks. That's it. Like on this 5-minute, the liquidity I was using was, man, we've had a touch here. Over here's 1, 2, 3, 4 touches. We've been respecting PD arrays the whole way down. We've took out the 7 to 8 o'clock high right here, and on a 15-minute, we're in a bearish 15-minute SIBI here. So this wicked out the 7 o'clock high, and then it sharply came down. So I'm like, okay, we're going down. I'm trying to predict the next hourly impulse. So, because if you can just get like a 15-minute part of that, I mean, look at that 15-minute impulse, 573. I mean, that's 20 minutes or 20 points right here, 556, almost 516. That's 40 points. That's all I'm trying to get is really a 10 to a 20-point move. So I'm just trying to get on side with the hourly impulse using, um, 15-minute chart, PD raise, 5-minute, 1 minute, 2-minute, whatever. But you can see how it, respects it. Let me get back over here. We didn't get up that high, but I'm just trying to see if I missed anything on the macro. I don't think I did. I think I traded what I should have initially. Yeah, because we're not in any 10 at L9. Are we in a PD right here? I don't know. I don't see it. So, I did take a loss, but we made we made it back. So I always start looking at the Forex factory. Then higher time frame PD rays are always going to shake out. But where I trade Asia, I make my bread and butter on the hourly chart, looking at the hourly highs and lows, seeing how we react to them. A good thing to remember is this is exactly how I trade. If you made it this far, is I look at the highs and lows, how we react to them. Manipulation versus displacement, meaning are we manipulating highs and lows, meaning are we sweeping a high and then reversing, or are we displacing through it, leaving PD arrays to come back, and continue? Is it a continuation type deal? Manipulation, meaning that we're going to turtle soup or we're going to reverse. And then I'm always going from internal, like when I'm looking at this 15-minute chart here at 8 o'clock, and I see these equal lows that I told you about that's been 1, 2, 3, and a fourth tap over there. This is a swing low. This ended up making a swing low. So I'm looking at least this to be broken and run through. So we were here at 570. We was looking, to come down here 545. That's 25 points. They ended up running, about 50, 60 points. So that's the simplicity of my system is price is going to go from external to internal. I just got to get on side with the hourly impulse, and that's it. Just looking at market structure. Are we bullish? Are we bearish? How are we reacting to bullish and bearish PD arrays? Okay, we're going down. Okay, let's look at the liquidities next. Okay, we're engineering sell side liquidity here, kind of like support and resistance type deal, type ideas. Um, we took out the hourly high, so to me that's taking out buy side, taking out the hourly high, and then we're targeting. We're thinking this is going to get blown out, and then using market maker models. I mean, look at this. This at one time was a bullish fair value gap, just like all this. So when you've got equal lows right below this, right below a bullish fair value gap on the buy side of the curve, it's going to run right through this like it just did. Boom. Those are where your quick energetic moves are going to come. Is if we're not going to continue off these bullish fair value gaps, we're going to run through them just like that. Boom, boom, all the way down. And then once we invert them, we're going to go and we make one, we're going to go back up and retest it. Boom, go down. Same way here. After we close, after this close, we come up here. It's probably consequent encroachment. We may come up a little higher. We may take out all these equal highs right here, come up here, tap into this, and then that's what I think will happen is we'll come up here at 55 and boom, go down. But I'm looking at the opposite side. Like if I'm selling, I'm looking at the buy side of the curve, seeing what PD arrays have been inverted, seeing if we're making new PD arrays, and then that's how I'm targeting, and that's how I know when the volatility is going to, should come in because anything that happens on the buy side, the sell side usually follows suit. I mean, it's not exact, but if you have a big fair value gap and it's not going to continue to the upside, we're going to rip through it. And that's where you can get some good quality trades. So I hope this helped. I'm going to be getting my new camera out and getting real detailed, buying some new software and stuff to get more organized. But until then, this is what I got. Uh, I appreciate you. God bless you. And good luck trading.